All right, good day, traders everywhere. I hope you're okay, and I'm also okay at this side. I hope your trades are treating you well, and you're treating your trades well as well. Okay. So now, my name is Njabula, right? And I'm here again with another video. This time, as you can see on my screen, you see gold there. And why gold? I said before that I found a good broker for gold, and if you want to trade gold with me, I will leave a link on my description below with some little amount, very little amount, only if you open an account with my broker using the link that I leave here. Other than that, then it's another story which I'm not prepared to deal with. Okay, so now as you can see, you have two gold charts here. This one that I opened on monthly, then this one on daily. This one is already marked, so we'll deal with this unmarked one. All right. Before I start again on what I want to show you, I just want to say thank you so much for all of you who subscribed. Thank you so much. I really appreciate that. And for those who share my videos with others, I really appreciate that. And if you haven't, please don't do anything else. Just subscribe and click the alert button so that you'll be notified every time when I post a new video. I am a smart money trader or ICT, depending on which terminology you prefer. I do not use indicators. This is just the basic to recap. I do not use indicators, so I use only what I see in the chart. If I don't see anything, then I don't do anything. All right. So now I want to show you today how to set up your trades on gold, and then I'll show you this using the PDFs that I compiled. All right, these PDFs I didn't buy them from anyone, but I sat down observing how the market moves, so I compiled that information. Very small PDFs. It's only two, but yet so powerful. All right, they have everything that I need, at least that I need in the market. I don't know about you, so you might need them and then you might not need them. It's up to you. I don't force you to get them, and I don't force you not to have them. All right, now let's start here. We see here gold is on a monthly time frame, right? So now, since we have this gold on monthly time frame, what do we notice here already? We notice that we have a higher high. Yeah. Okay, we have a higher high right here. So now the fact that we have a higher high, surely there must be a lower low. Then where's that lower low? It's down here. Okay, please guys, again, note this is how I do my analysis. All right, I'm not saying compare how I do my analysis with maybe your mentor or with someone else. All right, so now we need to have a lower low. So now the fact that we have a high and a lower low, it means we have a high. So now here is that high here. All right, fine. Now we do this. We mark our high, our break of market structure here. The moment now we mark this high, then it symbolizes what? It symbolizes a break of market structure, right? It symbolizes a break of market structure. Now this is monthly time frame, right? Now there's this what I refer to as a bullish base order block. All right, so now that bullish base order block, I touched on this in one of my videos. It is the candle that created the liquidity before the break of market structure. All right, it is the candle that created the liquidity before the market structure. So before the break of market structure, I mean. So now this is the break of market structure here. All right, so now where is that candle that created liquidity? here is that candle here, right? I'll just change this color quickly. I'll just change this color so that we have a cleaner. All right, now here is that color here. Oops, did I say that candle? That candle, it's here. And then as you can see, price came to it, it respected it, and then it moved a little bit back up again. Okay, fine. Now that this happened, now you have to investigate now what happened here prior to this candle, right? You have to investigate what happened here prior to this candle. Let me show you something quick on my PDF here. Where is that? Okay, right. Okay, we are not there yet. All right, cool. Now, from this lower low here until this break of market structure here, we must find we must find all the levels that push for the break of market structure here. We must find all the break of market structures here and the mitigations prior to this break of market structure up there. Okay, now if it is confusing, don't be confused. This is what I mean. This is the higher high, this is the lower low. I mean, this is the low rather. Then on that low, what we have? We have a break of market structure here. We have a break of market structure where right here. All right, fine, cool. In this break of market structure, what do we have? With our breaker block here. And then what do we see on that breaker block? Price came to mitigate it or for the first time, and then the second time, and then what happened after that? Price moved up. All right, as price was moving up, what do we see? We see another break of market structure right here. Let's take it from here, from exactly here. Okay, this thing must touch here. Okay, cool. Yeah, and then after this break of market structure again, what do we see? We see another break of market structure here. I don't think I honestly have to understand. I have to explain rather why all these are break of market structures, because by now you understand, you know what is a break of market structure, right? And that break of market structure. So what do we see there? We see again another block here, and it has been mitigated again. Yeah, right. And then finally, what do we have? We have this bullish base order block here, but still we have this. We have this now. We have this swing low here, right? This swing low now is above this bullish order block, is below this bullish base order block. So now what is happening here? What do we do if things are like this? Now, okay. Now, before you go any further, you need to understand why do you have this. You need to understand that. If you don't understand this, and then you are lost in all the time frames, all your analysis will be a mess. Okay, so now here is the thing. Now, prior to this low here that I referred to as a lower low from the very beginning, I said this is a lower low here. All right, why is that? Now you need to understand that price do not move, the market do not move without liquidity. That you must keep in mind. Market do not move without liquidity. It always needs liquidity to gain the momentum. That is what you must always know, right? That is why in ICT or SMC they always say that don't be liquidity, rather see the liquidity instead of becoming liquidity. Okay, so now what do we see here? We see another break of market structure here. It's very small. Here you need a trader's hawk eye here to understand this break of market structure, but it's a simple thing. In my previous video, I spoke about the normal break of market structure and the technical break of market structure. So this is a technical break of market structure right here. All right. So now, since we have that technical break of market structure, so we need what? That technical order block also. Now, this is our order block right there. Right. Why is this an order block? This is the candle that created liquidity before the break of this structure here. Simple as that. So that is the reason why we have this swing low here. All right. So now if things are like this, then you're good to go. Now you can continue to a lower time frame. Before we go to lower time frame, now what do we see here? We see a new high here, and then we see price came from what? From this breaker block. This is now a breaker block here. Why is it a breaker block? It was an order block, but it was violated here. So this was supposed to be a bearish order block. It is now what? A bullish breaker block. Instead of selling the very same candle, now we have to buy. We had to buy. All right. Now price reversed exactly where on this very same candle here. Remember, this is gold. It's controlled by news and whoever is speaking somewhere, and the US dollar, is it strong or is it weak? If you can check, if you can compare with your Nasdaq, if you trade Nasdaq, this 1, 2, 3, 4, 5, 6, 7 months of gold sell here. This this was a 7 consecutive months of buy on Nasdaq. If you can check that, if you want to compare. All right, so it may not be straight 7, but roughly above 5. So there might be some huge pullbacks somewhere in between, because the correlation now, they don't want to put it straight to say that okay, now if this is buying, this will sell, because everyone will predict the market correct every day. So they don't do exactly that. Now, what do we see here? We see price coming from what? From a bullish order block. All right. Now, before price stepped into this bullish order block, what do we see? We see another break of market structure here. Now, why is this a break of market structure? This low, here mitigated this bullish base order block. So now, this is the low, this is the swing high, and then at the swing high, what do we know? There's liquidity resting above it, and then at the swing low, what do we know? There's also liquidity resting above it. So now this week here collected all the liquidity that was resting below here, exactly. Yeah, right. So now it is a candle, but it closed as a wick. Right, it is a candle, it closed only as what? As a wick. So now we have a low, we have a high, and then we have a lower low. So now from this lower low here, price reversed to do what? Again, to mitigate now this candle here. Now the weak entries, this is a week here. In one of my videos I spoke about this, and I'm glad that if you watch all my videos, so you are not surprised with anything that you see here. Okay, now price is from what? Is from a bearish order block now. Right, price is now from a bearish order block, but is it really bearish on this time? Thank you so much. On this time frame, we cannot say price is bearish. Why don't we say that you need to see a confirmation before you can conclude your direction? All right. So now it depends on what. Okay, thank you. Put that. Now it depends on what are your confirmations. Some use trend lines, some use the RSI, some use the indicator, a lot of indicators. I have nothing against that. I'm only saying that if you want to trade the way I do or we do, you need to do away with the indicators. Okay. So now one of the confirmations that we're looking for is the change of character. In fact, that is the only confirmation that all spot money traders use. Only confirmation is the only confirmation. Now, when things are like this, prices from what this bearish order block here, then now what do? We go to our PDF, and then which one are we gonna use? Okay, this one, the entry in TP using OB the Vigo way. Don't be puzzled by this Vigo, just as the name of my institution. Okay, so now it says here, irrespective of any time frame or what you trade, please use the following simple and summarized method. Guys, this is for those who subscribe on my mentorship. So today I'm giving you something for free. As I said, this is called the month of love. So yeah, I just have that. So now it starts preferred time frames: monthly, weekly, daily, and M15, and then maybe M1, or M1 is optional for very low risk. Number one, you need to identify a value structure. A value structure characters, it must start from order block mitigation, then it must be broken with candle, not wicks. All right, so this is important also. That is why I said here we see a break below this previous low. It closed with a wick. This break of market structure here, it is with a candle, but it closed as what? It closed as a wick. So now, according to our PDF, it must be broken with a candle, not wicks. So that is important. Number two, you need to make sure you identify valid order block in a structure, right? And then please note this: there is no specific positioning of such candles. A lot of times I hear people say that another block, it is the last candle before the change of direction, or it is the last down, or the last up. Is it that the last selling or last buying? I don't know where they get that notion, because for example here, let's take a typical example. This is a good order block here, a very, very good order block here. It is not the last up candle. This is the last up candle here before this structure changed. This up there, it is the last buying candle. So I don't know where they get that, but anyway, we don't see market the same way. Okay, now we continue then. Then the valid order block, it must take liquidity, it must create imbalance, and it must break structure. Okay, fine. Now here, what do we see here? There's no liquidity here. Okay. There's no liquidity here. It did not create any imbalance here, but did it take out? What does it say? It must take liquidity. Of course, this high is higher than this one here, and it also broke structure. So this is a valid order block. Now when you go deeper in understanding why this is an order block, you see all those things on a lower time frames. Okay, so now we understand price is coming from a bearish order block. All right, so now we're done with monthly time frame analysis. It is gold is what we can confirm that gold is bearish. We can only say gold is coming from what, a bearish order block. Now we go to a lower time frame. You see, I'm taking my time. I took the whole 20 minutes to explain one time frame analysis. Yeah. Nah. So now, what do we see here? The more you go to lower time frames, is the more you need to refine what your chart. Then what do we see here? Now we see this as a valid entry now here. All right. Why is this a valid entry? Now, one of the characteristics of an order block that I heard a lot of people talking about is that it must engulf the previous candle. So what do you see here? This bearish candle engulfed what? This bullish candle. So that's one of the characteristics of what? Of an order block. Now there's nothing much to say here than to see that price really tapped in that bearish order block, and it is now in a bearish mode. Now this is weekly time frame. Now this is a lower time frame. Now what do you want to see to confirm that surely gold is bearish? If we can go to monthly on quickly, we don't see anywhere we anticipate what a change of character here. But on weekly time frame, we anticipate the break below this, and then it will confirm what? A change of character. This might look like it's a long time, like we have to spend a lot of time, maybe months, without taking a trade. Remember, this is a weekly time frame. So again, remember that whatever you see on a weekly time frame is the very same thing you'll see on D1, H4, M15, even H1 or M30, whatever time frame you choose, you see the very same things. And then now, as price is approaching what, this point here, to give us what, a change of character, right? What do we do now? We have these entry types here. This is for a buy, this a change of character, this is a continuation pattern, and then this is a reversal pattern. All these are simple entries. We are all used to with these entries. Then it starts at number 4. Now this is a breaker block here, right? This is a breaker block, and then we saw what happened on monthly exactly here. We have a high. Okay, we have this low here. We have a high, we have a higher low, and then we have a higher high, which broke structure here. Remember, we still have this low here, and then we have a break. Now we have a lower low way down here. Then this is our bearish order block. So what do you see? We see price pushed above it. So what does it become? It now becomes our breaker block. Now in drawings, in schematics, this is how simple it looks, but it is not always like this, right? So this is how simple it looks. Now this is a breaker block, and then now this is a complex continuous pattern here. This is for buy on the left and for sell on the right. Okay, so now this is a complex continuous pattern. That's where it starts, and then number 6, it gets more and more complicated. Now this is where your patience as a trader is tested. Okay, now this is where it's tested, because if you are not a patient trader, now when you see this break here, and then this break here. So okay, now we have a change of character. What does the market makers do? They will leave a trap somewhere here, what we refer to as a smart money trap, and then surely price will come to mitigate that and then push a little bit up, and then after that, what do you see? You see another break here. So you're definitely sure that, you know what, let me just go back to my chart and cancel this, because it's not gonna work. Why? Simply because you now have another break of market structure in a bullish direction. As we know, the basics of smart money. Now, this is all about the entries. What do we know? We know that once you see a break of market structure in a certain direction, it's either bullish or bearish. Expect now to take an entry into that direction. Now, when you see that, what happens, and then you put your order block down here, then price will come with a small wick below it, and then it reverses. Now, stop loss, obviously it won't be here, maybe somewhere down here, and then it's a I almost lost out. But the fact that this price is below your order block, then that must start to make you worry, and then you have to question yourself now, why is price below my order block now? If you see things like this, and then you must know that this order block is a very strong order block. It will hold. This is just to create what? Liquidity below and liquidity above. Sometimes it's exactly equal high and exactly equal low, and then price will start to attract all those who trade with triple top. They'll start to sell here, but when price gets there, what does it do? It reverses. Remember what I said when I started all this? I said price, the market do not move without what? Without liquidity. They need liquidity to move. So now the reason why this happens is for them to collect all the liquidity that is resting above here, and then after that they reverse. Why do they reverse? To collect liquidity that is resting below here. Then they tap here, and then they push out. As they push up again, there might be a bearish order block somewhere, then they reverse it again. Why do they reverse it? Because there's sometimes an order block. It might be down here, or it might be up here, and then they move up. Now, this is one of the complex entries in smart money, right? But I'm not there as per our PDF. So now, what is our direction here? Okay, we need to sell. Let's go to weekly. All right. Now we need to sell again. We need to sell again. What entry pattern is this? Okay. Now should we see should gold break below this and continue here? What entry pattern is this? I just show, guys. I thought I'm on Zoom, so yeah. Now should gold break below that, and then we'll be seeing entry pattern number 4. We are likely to see number 4 number 4 or number 5 happens. All right, so it might be a complex continuous pattern, or just a straight down continuous pattern. So if it's a straight down continuous pattern, we are supposed to see what? A breaker block as well, right? Let's get back to the chart now. Now on weekly, we expect gold to break here, and then we will take a sell. I don't know exactly where. We cannot say this candle exactly. What if we see a reversal now? Price close this imbalance. We don't know that. Now let's go to another lower time frame. So now you might be puzzled why I keep on saying lower time frames, but this is weekly, this is daily. Now this is the lowest time frame. According to my analysis, this is the lowest time frame. All right. So now, what do you do then when things are like this? Now you are on a lower time frame, right? What do? You can easily identify this uh, break of market structure here. This is a continuous pattern. Yeah. This is a continuous pattern, and then if things are like this, what do we do? This is our order block right there. This is our order block right here. All right, this is our order block here right there. Let me zoom in so that you see if it is mitigated or not. Let me put this thing exactly here. Now we can see we have a technical break of market structure here in a bearish direction, right? We have a technical break of market structure right here. Why is this thing not moving? Come on, mouse. Right here, yeah. We have a break of market structure, and then we have a mitigation of our order block. And then what do we have still above it? We have this candle here. We have this candle as what as our bearish order block. All right, now when you see this happens, this swing high here before the mitigation of this order block here, just know that that price is likely to do something like this, break, come up, push back, and drop again. Why does such things happen? Remember again, I will repeat the very same things. The market does not move without what? Without liquidity. So they pile all the liquid, they trap all people who are impatient in the trading industry. And as much as they attack them, what do? They put their orders. All those who sold here, all those who sold, did I say sold? all, yeah, all those who sold here, their stop loss is just above here. And then what do you see also here between this week and this week here? This is an imbalance, and then if you see an imbalance, know that price will come back to fill that gap, and then mitigate the candle above or below it. That is what always happens. That is what we always see in the market. So that might happen after an hour, that might happen after 4 hours, or after a day or a week or a month or even a year. There's something I was analyzing on my mentorship. We saw a Alright, we saw another block that was created, I think it was 2017, and it was only mitigated in December last year. That is 5 years clean. So if you see such things, always know that this is just a trap. Yeah. But now, your question now might be, what then do we do if things are like this? Well, we have a continuation pattern. Yeah. Remember, since we have a continuation pattern, wait for price to break this low here. All right, we wait for price to break what exactly this low here. Now, this is where I will end with this analysis. Anything below this, it will be just to confuse myself only. I don't like the small time frames like at all. I don't like them. They're so confusing because if we can go, for example, let's go to H4 now. Do you see then what happens here? We have to mark all this. We have to mark even this break of market structure here, and then we have to mark also this break of market structure here. I am not saying, guys, that do not mark such structures. Do mark them. Okay, I'm not against it at all. I am not against it. Just as that small time frames are not my thing. Okay, so you have to mark also all these. Yeah, all right. You have to mark all these, and then before price breaks this year to confirm a sell on a higher time frame, and then you need a lot of time in the market to understand what is happening here. All right, so I'll just end my analysis. Let's get back to D1. Do you see how simple it is on D1? It is very, very simple. So now the only thing that we can do if you want to follow this setup on gold, right? Now the entry here after after this break here, okay, now we'll see price reverse. As price will reverse, we don't know exactly where the order block will be. It's either it will be here or somewhere down here or somewhere down here. Then when that happens, this is what you should do. Just check you need to refine your gold from D1 to your entry time frame that you prefer, all right, and then pick the above. Just pick the unmitigated order block in this pick the unmitigated order block inside the higher order block that is also unmitigated. There's nothing confusing there. Pick the unmitigated order block inside the unmitigated order block of a high time frame, and then should you see first, let's say for example, I'm not saying that it will be exactly like this. Should you see this being broken in a bullish direction, then wait for the market to reverse and then you continue. Once you take your buy from here, just know that this is your take profit. That is how the market moves. It needs all the liquidity, and then from there it will shoot straight all the way to here. This is how the market moves. They need liquidity before they can move. I cannot emphasize this enough. All right, so yeah, that's all I wanted to show you today, and then there's a link on my description below where you can talk to me direct, and then there's an imposter here, guys. That person is not me. That person is not me. Is telling people that they must come and invest in bitcoins and wara wara and all those things. I don't do such things. This is the only thing I do. Now this is gold. I just added gold on top of V75. We also take gold now. So there's a link on my description to open to open an account. So you pay a small fee so that will trade this, and then also for those who are around Gauteng, and then as soon as you join, and then very soon, but the date is not confirmed yet. Soon might be tomorrow, soon might be next week, soon might be next month, soon might be in October, just before the end. Then we might have a lesson in Santin, all right. We might have a class in Santin, which will not be Zoom. You'll see me direct, You'll see me. I'll be there in person, and I won't be on Zoom while we are there. And then there are some few logistics that need to be taken care of. Only if you trade with my broker, and then you'll be allowed to get in there. And then how much will it be? As I'm saying, that some logistics still need to be taken care of, and then we will see then what to do. All right, guys. Have a good day. Then also, if you need these PDFs, right? I gave two free PDFs for those who was here for a long time. All right. So now these ones I'm giving them at a very, very, very small fee, at a very, like a very, very little amount of $30. These two PDFs, they're very good. Trust me, only if you follow what's written on them. $30, and then you get them, as simple as that. All right. So yeah, that's all I wanted to show you today. Have a good day, colleagues. Njabulo here. Sharp.